Okay, we are live. Uh, right, so welcome everyone to the second Finance Academy webinar. We are very glad to have you here. So thanks for joining us. Um, Today we'll start with the basics of crypto collectibles and non-fungible tokens, or NFTs. Then we'll present a few examples of candlestick patterns used in technical analysis. Then we'll have a brief discussion on the use of blockchain in prediction markets. And finally, we'll reply to some of your questions in our Q&A section. So feel free to drop your questions in the chat. Okay, so let's get started.
Alright, so first we're going to talk about NFTs, or non-fungible tokens. So, NFT stands for non-fungible token, and it's basically a token on a blockchain that represents a unique asset. So, this can be either a digital or a real-world asset, and a bunch of projects are experimenting with them for a variety of uses, such as gaming, digital identity, licensing, and certificates, for example. They can also allow fractional ownership of high-value items such as real estate, fine art, exotic cars, and things like that. So because of this, they might become a major building block of the new digital economy. Okay, so a non-fungible token is a bit of a scary word, but to understand it, first we need to understand what fungible or fungibility means. It means that an asset's individual units are interchangeable and essentially indistinguishable from each other. So think of a dollar bill, for example. In theory, when you hand it to a merchant, they won't be able to know the history of that bill, and that's absolutely vital for currency. Like, imagine if the merchant would be able to track the entire history of that dollar bill, and maybe he decides not to accept it because it was previously used in a black market transaction. So how do NFTs work? Let's consider them with the example of the dollar bill again. Basically how it works is, imagine if we would assign a unique number to each bill to make them purposefully distinguishable from each other. That's essentially analogous to what an NFT is, but in the digital realm, of course. In terms of how you can use them, they work just like any other token on the blockchain. So they will exist in an address in your wallet, and you can store them, transfer them, exchange them. You can do that in Trust Wallet, of course. Now, if you want to exchange them, you can go to a marketplace. Currently, one of the most used ones is called OpenSea, where you can list your NFT and wait for others to bid on it. It's basically like eBay for these tokens. And it's worth keeping in mind that since each of them is unique, they can have different value. And that value can fluctuate just like with anything else that has value. Now let's move on to examples of projects that use NFTs. So you may have heard about CryptoKitties, which famously clogged up the Ethereum network with the high amount of transactions that it has spurred up at a certain point. it allows players to collect, breed, and exchange virtual cats that are, of course, NFTs. Each CryptoKitty can have a combination of several different properties, such as age, breed, or color. And so each of them is unique, and they can't be interchanged with each other, but they can be exchanged. So this was a novel idea, and it went viral pretty quickly at a certain point, even reaching the mainstream media, as some of the CryptoKitties have sold for hundreds of thousands of dollars. So, okay, what are some other projects? One is called Decentraland, and it actually launched a couple months ago. It's a decentralized virtual reality world where players can own and exchange pieces of virtual land and in-game items. Then there's a game called Gods Unchained, which is a collectible card game where the cards are issued as NFTs on the blockchain. So if you think about it, this use case actually makes a lot of sense because people have been collecting and trading real cards for decades now. but digital card games couldn't really replicate this experience, and there wasn't really an opportunity for a secondary market where players can exchange ownership of these cards. Why is that? Because they are digital cards and you can copy them infinitely, but that's the point of NFTs, that you cannot copy them. So My Crypto Heroes is a multiplayer role-playing game where players can level up historical heroes through quest and battles. These heroes and items are, of course, NFTs. Then we have the Binance collectibles, which are NFTs that are issued by Binance. So if you follow us on Twitter, there have been a bunch of promotions where you could earn an NFT, and there may be more coming in the future. And lastly, an interesting one is crypto stamps, which are issued by the Austrian Postal Service. This is the unicorn you can see on the slide here. So these work just like any other stamp. You can transport mail with them, but they double up as digital images stored in the Ethereum blockchain. So that's kind of a fun way of mapping the real world to the digital world. Okay, so that's it about NFTs. If you want to learn more about them, read our article. And you can also check out our blockchain use cases gaming article on Binance Academy. And now moving on to candlestick patterns.
Cool, thank you for that. Okay, so now we'll present a few popular candlestick patterns that are widely used by technical analysts and traders. The Binance article brings 12 examples, but to keep it short, we won't go through all of them here, so make sure to check the article on Binance Academy later for the complete list. I would divide the examples into 4 different groups: bullish reversal patterns, bearish reversal patterns, continuation patterns, and the so-called doji candlesticks. Next slide, please. But before we dive into the patterns, I want to explain very quickly what is a candlestick for the ones that are not familiar. So a candlestick is a charting tool that illustrates the price movements of an asset within a specific period, which can be 1 hour, 4 hours, 1 day, or weekly charts, and so forth. So if you're using a daily candlestick chart, each candlestick will represent 1 day of trading activity. But if you're looking at a 1 hour chart, each candlestick will represent 1 hour. And here you can see that each candlestick is made of 4 components. The number 1 is the opening price, which is the first trading price recorded during that period. Next, we have the high price, which is the number 2, as the highest trading price recorded within that period. Then we have the low and closing prices as number 3 and 4, which are the lowest and the last recorded trading price during that period. Note that if the price is going down, the opening price is above the closing price, and this is usually represented by a red or black candlestick. But when the market is moving up, we have the opposite. So the opening price is below the closing price, and this is usually represented by a green or white candlestick. Next slide, please. Okay, so let's take a look at the candlestick patterns now. Please note that these patterns, they don't always play out as expected, so don't rely on them alone because it can be quite risky. And remember that technical analysis can never guarantee anything. It's all about probabilities and possibilities. And the time frame you are using is also important. So if you search for candlestick patterns in short time frames like 1 minute or 5 minutes charts, you will likely find lots of patterns that don't play out, so please be careful with that. Okay, so here we have 3 examples of bullish reversal patterns. Note that the patterns are in between these little stars, but we also added a few more candles to give you context, of course. And the first one is the hammer pattern. So it is a bullish pattern that indicates that there is a potential reversal of the trend. So we are coming from a downtrend represented by these 2 red candlesticks, and then we have the hammer pattern suggesting that a trend reversal may occur. The idea here is that the selling force is slowing down and the buyers are stepping in, preventing the downtrend to continue. And to consider a candlestick a hammer, we should have the lower wick at least as big, at least twice as big as the body. So usually the wick is much longer than the body of the candlestick, and that's why you have this hammer shape. Next, we have the inverted hammer, which is basically the same, but instead of having the wick below the body of the candlestick, we have it above. So, but still, the way that we interpret is basically the same. It indicates that the sellers are getting exhausted and the buyers are stepping in, causing the trend to reverse. The third example of a bullish reversal pattern is what we call three white soldiers. So again, we come from a downtrend and create a local bottom and reverse to the upside. And as you can see, the three white soldiers are represented by these three big green candles. For this pattern to be valid, the second and the third candlesticks should have the opening price within the body of the previous candle, and the closing price should be above it. And this is what gives us the reversal and the start of an uptrend. In other words, the buyers are taking control of the market, pushing the price higher. Okay, moving to the next slide. Now we go into the bearish reversal patterns. The logic here is kind of similar, but these are like the bearish equivalents of the previous patterns, pretty much like opposites. So the hanging man is like the bearish version of the hammer, but instead of coming from a downtrend, we are coming from an uptrend that slows down and reverses to the downside. Now we go in, then we have the shooting star as the bearish equivalent of the inverted hammer. So again, coming from an uptrend, the buyers get exhausted, sellers start to step in, and the market drops. And lastly, we have the three black crows, which is the bearish version of the three white soldiers. So the market is going up, finds the local top, and then reverses to the downside, forming these three big red candles. And again, for this pattern to be valid, we should have the opening of the second and third candles within the body of the previous ones, and then the closing price below it. And this is what gives us the downtrend, suggesting that the sellers are now in control of the market. Next slide, please. Next, we have the continuation patterns, which are basically neutral patterns. So they indicate that the market is taking a break, but the major trend is still valid. So the first example here is what we call the rising three methods. So imagine that the market is going up, then it corrects a little bit with these three small candles here, and then continues to move up with this big green candle. So this shows us that despite the small break in the uptrend, buyers were not done yet, and the major trend is still valid. Then we have the opposite example with the falling three methods pattern. So during a downtrend, we have a small bounce, which is represented by these three green candles. But as you can see, the bounce is not strong enough to reverse the trend, so the market just continues to the downside. And that's why we call these continuation patterns. Next slide, please. Lastly, we have the doji formations. So dojis are formed when the opening and closing price of a candlestick have the same or very similar values. So you can see that these candlesticks, they don't have a body. They are just made of lines or wicks. Doji candles indicate that we are in the indecision points. So they suggest indecision points between buyers and sellers. There is no clear winner. And that's why they are highly dependent on the context. And as you can see, the different types of dojis are based on the position of the opening and closing price. So when these are near the highest point of the candle, we have the dragonfly doji. But if you have the opposite, we call it a gravestone doji, which has the opening and closing price near the lowest recorded price for that candle. And lastly, we have the long-legged doji with the open and close price in the middle of the candle. it's a symmetric one. At first glance, it's natural to see the Dragonfly Doji as a bit more bullish than the Gravestone one, but in reality, it really depends on the context. As I said, you can't really tell just by looking at the Doji alone. So you should always consider the candlesticks that come before and after it, and also other factors, of course, like the trading volume. Uh, yeah, next slide, please. Okay, so that was all from my side. If you want to learn more about candlestick charts and candlesticks patterns, make sure to check our articles on Binance Academy. And now we're going to talk about blockchain and prediction markets.
Let's crack. I'll be talking to you about the blockchain use case for prediction markets. So let's begin with what a prediction market is. It's a speculative market, just like any other, but it trades on the outcome of future events. So examples of that could include things like, will Trump win the next US election, or will Half-Life 3 come out by 2021? You can see the example we've put up on the screen here, will we set foot on Mars by 2030? So from that graph, you can tell that there are two possible outcomes. There are yes and no, and crucially, you also have an expiry date, which in our case is 2030. So examples of that could. So if you wanted to launch a market like this, you will create yes options and you will create no options, and you'd make them available to investors. So those options are redeemable once the contract expires. Well, rather, one of them will be redeemable once the contract expires. So if we do land on Mars by 2030, you can trade in your yes contract for $1. If we don't, your no one can get traded in for $1, and the other one will be useless. So 2030 is 10 years into the future. There are lots of variables and new developments that could impact how the market sees events. So you can see there that the price kind of fluctuates over time. And as you get closer to 2030, you start to see both options trading at more extreme points. Just purely because if you did want to land on Mars by 2030, you would probably need all the infrastructure in place. You would probably need a spaceship to launch a bit before that deadline. In the meantime, if it's looking unlikely that we're going to land on Mars by 2030, yes options might trade for 10 cents because no one believes it'll happen, whereas no ones could be worth a lot more. So even if a no contract is trading at 95 cents, if investors are relatively confident that we're not going to land on Mars, that's great for them. They can buy them for 95 cents and make a 5-cent profit on every option once the contract expires. So why is this interesting? Well, you might have some information or insight that no one else has. You could, for instance, be a SpaceX engineer with ultra-advanced rocket technology that hasn't been released to the public, so you're relatively confident that will boost the chances of getting to Mars. Or conversely, you could be a NASA scientist that just discovers, say, an impenetrable barrier around Mars that stops anyone from landing. So these parties can profit from the information they have without explicitly giving away that information. And if we scale this outwards, not everyone is a scientist or an engineer, but everyone will have sort of small bits of knowledge, informed opinions, insights, and as a result, these many opinions are represented in the markets, and they shape the options to be almost like probabilities. Of course, this is dependent on having a big enough market, but if yes trends towards $1, it's safe to say that it's likely we will land on Mars, because no one's going to be risking large amounts of money on a gamble. Some people will, but the market as a whole certainly won't. So, if you're familiar with the efficient market hypothesis in traditional financial markets, which says that everything's priced in, the market acts rational, we can kind of apply the same logic to prediction markets, but we're using it to predict future outcomes. So, the idea here is that we get something called the wisdom of the crowds, and by querying every stakeholder, we get a much fuller picture of what might happen. So that's not just useful for gambling. This can give people across all sorts of industries some insights that they wouldn't have access to otherwise. In a sense, it's a bit like global market research, and people are staking their beliefs with real money, so they're a lot more likely to report the truth. Now, why would we use a blockchain? It's a question you always have to ask. First of all, censorship resistance is a compelling feature. So centralized platforms, they run the risk of being shut down by authorities or malicious actors, both internally and externally. So internally, you could have a rogue employee on a centralized prediction market tampering with the real data and misrepresenting, what's going on to investors. Externally, you could have hackers attacking single points of failure that are the servers of the platform. They could shut them down or just generally cause chaos. In a distributed system, what you'd have instead is no single party. Each node would run the rules itself and smart contracts, and they would share the data across the network, and everyone can kind of verify that that information is true. So if you have a network of 10,000 nodes, you can't feasibly shut down the whole network. And since everyone's kind of checking the information themselves, you can't misrepresent the data. Now, another strong feature of using a blockchain, in this case, is that anyone can participate anywhere around the world. There's no KYC or entry requirements other than an internet connection and a small amount of digital currency. Now, there are a few prediction markets or a few projects in the blockchain space already, but they're not without their issues. Firstly, there's a lack of adoption, which doesn't make them very effective for accurately predicting events. But a big problem we have as well is ascertaining the truth without trusting a central party. So you could have this massive, sprawling, decentralized network, but if you're relying on, say, a website to tell you what the outcome of a contract was, you're sacrificing all of the advantages you have from a distributed network by trusting that website, because a hacker or authority could just attack the website. That's a central point of failure. So there's some work on decentralized oracles that can report the truth without any counterparty risk, but those haven't quite materialized yet. Other projects use dispute resolution mechanisms, which are kind of they're not all the way there yet. I'd advise you do your research on those if you're interested in them. But nonetheless, this could be a very interesting blockchain use case in the future. Thank you for listening. Some links on the screen here, and we'll move on to the Q&A now.
Alright, thank you. Yeah, so here are the QR codes for our Telegram groups in case you haven't joined yet. And now we can start the Q&A section, so let's see if we have something in the chat. So IBLB562 is asking where is the address to send BNB and get double back. So guys, these are scams, so be careful. We are not doing those kind of giveaways. And please never send your funds to someone that is claiming that they will send you double or extra funds back. Don't trust those guys, these are scammers. So be careful, please. How does hash rate and mining difficulty affect demand and supply and consequently the price of BTC? Okay, yeah, that's Sim Adegoke's question. So hash rate represents the amount of computer power being devoted to the Bitcoin network, and that means the more miners join the network, the higher the hash rate becomes. It gets more competitive, right? And as the market grows, as the mining industry grows, we have more people trying to fight for those block rewards. And it's kind of hard to predict how this affects the price of Bitcoin, because mining is one thing and the market is another thing, but of course the miners, they have a significant amount of BTC because they are producing new Bitcoins every 10 minutes, every new block. But there are a few theories about that. Some people are tracking those charts and they try to make correlations between the mining, the hash rate, and the price. But we don't really have a clear answer to this question. It really depends on the demand and supply, and it depends on how much the miners are willing to sell their Bitcoins right away, like right after mining, or they need to pay their electricity bills. They need to pay for the costs of mining, which are quite high. So we can we can guess that they sell a good amount of those coins, but it's really hard to tell. Like, we don't know how much they are selling or holding, in fact. So it's not really a clear answer to this one.
Okay, good stuff. So next question, are NFTs built on Ethereum blockchain? So not necessarily. I mean, most NFTs that are in existence right now, they are generally on Ethereum because it has probably the most developers building on it. But the concept of NFT isn't intertwined with Ethereum, so it could exist on other chains that offer a similar functionality.
James Yeager, is Bitcoin fungible? That's a very good question. It's a subject of a lot of debate. I would say functionally, Bitcoin is fungible. If you have a Bitcoin today, you can swap it with someone else. In practice, there are some businesses will look at coins that have been involved in past transactions that might be deemed black market transactions, and they will freeze those coins. So that's not a very widespread problem. There are ways that you can kind of break the chain between coins, but for the most part, Bitcoin is fungible. It could be a problem in the future, in which case techniques like coin joins. There's a lot of research being done on the coin swaps these days. Those would effectively make Bitcoin more fungible.
Yeah, so the discussion here is because, you can track where the bitcoins are coming from and where they are going just by looking at the blockchain, which is a public database. So it's actually understandable that in some situations, merchants or service providers, they may deny receiving your bitcoins as payments because they believe those were used by criminals in the past or something like that. But in my opinion, unlike some tend to believe, this doesn't make Bitcoin, it doesn't remove Bitcoin's fungibility, because traceability and fungibility are two different things. And despite their transactional history, each Bitcoin is still the same in terms of quality, technology, and functionality. Like, the code and the technology is the same for every coin. All the coins have the same inherent value in terms of use and practical use case. So in my opinion, Bitcoin is actually fungible, and we also have those coin mixing and coin joins technologies, as you mentioned, that can help us kind of get rid of the not so good past of some of those coins. Okay, let's see.
What happens when the last BTC is mined? From the standpoint of the blockchain hopefully should keep going. That's over 100 years into the future, so it remains to be seen. But the hopes is that at that point, since miners aren't getting block subsidy as a reward, that the fees you pay for making a Bitcoin transaction will make up for that. Mining's expensive, so they want to be making a profit. It could be problematic if all the Bitcoins are mined, so they're not getting a reward from the protocol, and they're not getting enough in fees to justify the expense on electricity that they're using. So ideally, a fee market would arise to keep the system going.
Yeah, that's a quite good question, because we don't really know, but the idea is that if the network grows significantly, we'll have enough rewards coming from the fees alone, even if we don't have more, new BTCs being generated. Okay, so how does the Oracle work? So oracles are basically gateways that kind of communicate blockchains with external worlds, external database or other kind of sources. So there are some kinds of data that blockchains can't really access directly. So oracles are kind of the bridge to those information. For example, you can have a blockchain that connects to an oracle that connects to a weather forecast database, and then you can do this sort of bridge to interact between these two worlds. So the oracles, they work as a middle intermediary of information in this case. But of course, oracles are much more. There's much more than that because we are talking about blockchain oracles in this case. If any of you guys want to add something.
Right. So yeah, if we think about blockchains, it is a closed system. It's essentially a closed database. So they need to have a way to communicate with the outside world, and an oracle is just basically, connecting them to external data. Now there are multiple sources where this external data can come from. So it can be another software, of course, another blockchain, but it can also be a hardware chip or things such as that. And what is also interesting about oracles is that it's really difficult to make them reliable. It's one of the greatest challenges right now in blockchain, or it's a great challenge right now for developers, because it's if some decentralized applications rely on oracles and the oracles break, then the entire application can break, and then a lot of money can be lost in that way. And so a bunch of Oracle implementations are experimenting with, using multiple sources and then creating kind of an index based on those, or using multiple sources and those multiple sources reach consensus somehow, or they are put together to create one source that the application can use. But this problem is definitely not solved yet, so the jury's out on this problem.
Sorry, I'll skip ahead a couple questions just because I see another one related to oracles. We'll circle back. But what makes oracles more reliable than just any other API or something like that? That is the $1,000,000 question here. At the moment, a lot of things seem to be, using APIs and kind of aggregating all those APIs to try and get it. But this is a well-researched problem. So remains to be seen.
Okay, good stuff. So, next question. Why are DeFi tokens becoming valuable? Kindly give more background on DeFi. So, actually, I just saw this, I think today or maybe yesterday, that the volume on decentralized exchanges is exploding this year. So, it started out as $5 million per day aggregated on the biggest dexes all around, and now it's around 25 million. And so, if you look at DeFi tokens, usually they bring some kind of utility for a decentralized exchange or an application, or they give governance rights to token holders. So generally, there is some kind of utility that is attached to these tokens, and so it somewhat makes sense that the more people use the platforms to exchange coins or to lend or borrow, then the demand for those tokens rises, and so the price rises like that. And of course, something else to consider here as well is that a lot of the crypto scene is driven by speculation. So if there is a narrative going on that DeFi tokens are doing well, then many speculators will jump on the opportunity to try and profit off of this narrative that is going on, and so they might buy those tokens that haven't jumped on this train, but that are also in this DeFi token sector. And the third reason is that we like it's really difficult to attribute these kinds of moves to just one specific reason. So that's also important to keep in mind that we may not know, but the volume increase this year is probably a good chunk of that.
Yeah, I mean, DeFi is basically giving more use cases to the blockchain technology as a whole. So creating new apps and creating new services and, all sorts of stuff using blockchain and decentralized finance applications. So it's certainly a new industry that has lots of potential to grow.
Yeah, for sure. And I mean, it's so I think it's kind of shifting to a point where until in like the last 2 years maybe it was all about platforms that are trying to build something and they're working on it, and right now they are starting to ship all those features and ship the things that they planned out from the start. And so that also probably plays a pretty big part in it, that now they are actually making applications that can be used.
Yeah, sure.
All right. Can Bitcoin be made non-fungible? Fungibility is a very subjective topic. You see, with cash, say someone brokers $1 million drug deal or something, and they go to the shop and they pay with cash, to buy something. You go to the shop later on, and you receive that cash as change. That cash you can still spend it anywhere, and no one's kind of tracking the cash. To check its origins. So there is a practice with blockchains, predominantly Bitcoin, but also other chains called chain analysis, which will seek to kind of trace where all the coins are coming from. So as we said, I think we all believe here that Bitcoin is functionally fungible, but there is a possibility that it's chain analysis techniques become a lot more sophisticated, and that they can effectively track every coin, in which case under the law they could be made non-fungible, but technologically every Bitcoin's functionally identical at the protocol level.
Yeah, so I think it's not like a black or white answer, because some coins can have maybe you find some coins that had a dubious history and maybe were used for illegal activities, and those coins are likely to be rejected by merchants because of that. But in general, Bitcoin as a whole, I don't think I don't think it loses the fungibility at all, because it's functionally every coin is the same in terms of technology. So yeah. Okay, is blockchain the future? That's a great question as well. I mean, we don't really know what's gonna happen in the future, but what we do know is that blockchain is a very unique technology. It's a groundbreaking technology because it gave birth to a whole different way of storing and sharing and securing data. So essentially, a blockchain is a database that is robust, secure, because it's decentralized and distributed database. We don't have like a single point of failure. We don't have a central database that can be attacked or hacked. Blockchains are made by multiple nodes which are spread out in different locations. So this is one of the things that brings a lot of security, and it's one of the things that makes blockchain so unique. But of course, there are many ways of designing and implementing a blockchain, and it really depends on the structure. It really depends on how many nodes you are running and who are who are those nodes, like who is controlling those nodes. Certain blockchains can be more decentralized than others, of course. But yeah, in general, I think it's a very powerful technology, and it's certainly a growing industry, very powerful industry.
Okay, next question. DeFi day by day increased volume. Any fear about Binance exchange volume down? So Binance does have a decentralized exchange, Binance DEX. It's one of the most used DEXs out there. So, and if the blockchain space is quite small now, so any growth benefits all participants. So in that sense, it's great if something is growing. And then
yeah, I think it's
sorry, go ahead.
yeah. Go. I think it also relates to the use cases, because some users, they don't want to be in control of their funds because they get confused. They don't want to be like risking, making a mistake with their private keys. And we do have some users that prefer using the centralized services. They are more comfortable doing that. And we have other users that prefer the decentralized ones. So I think they offer different services, and it's not really a competition, in my opinion. It's like you said, if the industry grows, it's good for everyone.
Right, that's actually a great point. Because I said earlier that the DeFi platforms have now $25 million aggregated volume per day, but if you actually think about it, that's still really just a small fraction of the spot market and more notably the derivatives market. So if you look at the traditional markets, the derivatives market, I think, are around 10 times bigger than the spot markets. And so that is probably going to be always the biggest market out there. So futures, for example, in terms of volume and liquidity. And if you think about it, $25 million volume per day on all the decentralized exchanges, it's still like usually a 5-minute candle on like a very volatile day has more volume than that on a futures exchange. So it's the user experience of DEXs are really quite far right now from centralized exchanges, and many users don't really want to use the custodial options because they bring in a different type of risk for them, and then other users will prefer the decentralized options. So it's a matter of preference, really.
Yeah, sure.
So the next question is also related to DeFi. How will Binance take advantage of the DeFi explosion? Will they make another token for DeFi? We just write educational content for Academy, so we don't make decisions on what tokens to launch or what exchanges to what to do with the exchange product. But as I said, there is Binance DEX that uses BNB, so BNB tokens can be exchanged for. BNB can be exchanged for BEP2 tokens, which is a token standard for Binance Chain, and there are also other. So there's, for example, Bitcoin issued on Binance Chain, so you could even trade Bitcoin on Binance Chain if you wanted. So yeah, all in all, that's not we don't decide that, but as I said, I think the token prices going up seems like a big advancement, but compared to the decentralized exchange options, it's still a very small chunk of the market.
All right. Do we have any other questions? I'll give you a few more seconds.
I can actually answer the next one. Binance should give dividends to users like other platforms. So if you go to Binance, you will see that we actually have a lending platform as well as staking. So if you want to earn passive income, you can look into those. And you can do that directly on the platform.
All right. Okay, guys, I think that's it for today. Thanks a lot for joining us. We appreciate that, and we'll see you in the next one.
If you have any other questions in the meantime, if you head over to Ask Academy on Academy, if anything comes to it, it's a question and answers platform.
Oh, we got another one. How to describe the blockchain technologies changing the world of business, finance, and all industries? Okay, yeah, that's quite broad question, but it kind of relates to what we said before. Like, if you think of blockchain as a decentralized, distributed database, you can use it for all kinds of digital information, all kinds of files, not only cryptocurrencies. So you can use for cloud storage, you can use for ID and supply chain, all sorts of use cases, and that's the thing I always mention. Like, the technology itself is really powerful because it can be applied to all sorts of scenarios and industries, and that's why it's growing so fast, because it's just like a new way of storing and securing digital data that can be used in so many different ways, and that's what I would say. That is really changing the world of business, finance, and all industries.
Yeah, and also, if someone asks you about blockchain, you can just direct them to Binance Academy, because we have a lot of content that is all tailored to beginners and people who are new to the space and they want to, expand their knowledge on this subject.
Yeah, you can also bring your questions to the Telegram chat or Ask Academy. We'll be happy to help.
Yeah, I mean, on that point, I think we must have about 12 articles on the different use cases. So there is a very broad selection of topics on there.
Yeah, if you search for use cases in the search, you find lots of articles. Yeah, so regarding the Binance app, unfortunately this is not something we can answer for, because we are creating the content for Binance Academy. We don't really work with the app or other stuff. We are different teams. So if you're having problems with the app or the exchange products, I'd recommend you to contact the customer support, and I'm sure they will be able to help you.
And by the way, regarding making the app simple, there is a light version of the app, as far as I know. So when you actually install it, it asks you whether you want the simple version or the more advanced version. So you may want to try out the simple version, because that only contains like the most essential functionality, and that might be better to or easier to use.
Okay, so Mus is asking if Binance is recruiting for French translating. I'm not really sure about the French translation job specifically, but you can actually check the open. We have if you go to Binance website and scroll down, you find that careers page. You can see the open positions for Binance. and then you can send your CV, and if you already did, you probably just need to wait a while to get an answer. But it's not really on us to answer that. It's not on our team to work with the recruiting stuff.
What would you say are the 5 most important indicators? That I can't really give you an answer for that. It's a very personal thing. Some people prefer different ones than others. The best thing to do is just kind of read up on all of them. Find the ones that best suit your trading style and to use those.
Yeah, we actually do have an article called 5 Essential Indicators, which, and we don't really say they are the most important, but we chose them based on, they're one of the most common. And I think those were the RSI, moving average, Bollinger Bands, the stochastic RSI probably, and something else, which I can't remember now. But if you check out the article, that really sums that up. But yeah, I mean, it's all about your preference. It's all about your trading style and what works for you. And because some trader will tell you that this works great for them, and the same thing might not work for someone else. So it's all about finding what you like and what fits your trading strategy, your personality style, all that kind of stuff.
Yeah, that's a good point because, of course, we have some popular indicators, the most used ones, and etc. But it's all about your trading style and finding what works for you, and that also includes testing a lot. So before actually risking your money and trading for real, it's interesting if you could just test before, like pick 1 or 2 or 3 indicators that you find interesting, that you find useful, and kind of practice with those. Practice your craft, chart reading, price action, and volume, and everything. And then you do some paper trading. So you kind of do fake trades and you just note down your results. And after a while, you have a decent amount of data that you can actually uh, analyze and conclude if it's really working or not. So yeah, it really depends on your style. Some people are more aggressive. They use shorter time frames. Others are more like long-term traders. They buy like today and trying to sell like in weeks or months from here. So it really depends on your style.
Okay, can you explain quarterly futures versus perpetual futures? So we're actually working on an article about this that's coming out soon, but the short answer is perpetual futures do not have an expiry date, and quarterly futures do have an expiry date, which is the last Friday of the given quarter. So, for example, the first quarterly contract that launched is expiring on the 25th of September, which is the last Friday in 2020 Q3. And basically, when the expiry date comes, then the contracts settle to the price where they are trading at that moment, or in the last hour rather, the last hour of trading. And an advantage over perpetual contracts is that they may be better for longer term positions because when you're holding perpetual contracts, you have to pay a funding fee every 8 hours, and that mechanism is there to keep the futures price as close to the spot price as possible. And because the perpetual futures never expire, if there would be a big disparity between the futures and the spot price, there wouldn't be a way to actually get them closer. And so you have to pay a funding fee, which of course, if you intend to hold it for weeks or months, that will chip away at your position. So yeah, that's the main difference, really. And I think the fee structure is also different. There are maker rebates. Sorry. So if you fill your order as a maker, you may get a fee rebate based on what fee tier you are in.
Two questions here on options functionality from Judith. The answer is I'm not too sure, to be honest. This isn't really our area of expertise.
Yeah, we are not in charge of options, so we don't know what features they're planning to implement. Okay, so we're closing in on 1 hour, and we don't have any questions left, so I think we can end the stream.
Sure. I will just add that we have an upcoming quiz in the Telegram chat on some of our articles. We'll be handing out rewards for that, so if you're interested in that, we'll be discussing that a bit further in Telegram later on. I believe we have a QR code, sorry, on one of the slides here.
Yeah, I can go back to it. Here it is.
Alright, so thank you guys for joining us. Thank you once again. That's all for today, and we'll see you in the next one.
Alright, take care, guys. Bye-bye.
Cheers. See you later.